Ever scrolled through social media and felt a pang of envy? It's a feeling that creeps up on you, often when you least expect it. You see a post, a picture, or a story, and suddenly your life feels a little less exciting. Your friends are sipping cocktails on a beach in Bali, laughing and enjoying the sun. The vibrant colors of the ocean, the carefree smiles, and the clinking of glasses make it seem like paradise. Meanwhile, you're stuck with instant ramen for dinner. Again. The contrast couldn't be starker. The steam rising from your bowl feels like a reminder of the mundane routine you're trapped in. Sound familiar? That's the dreaded FOMO, the fear of missing out. It's that nagging feeling that everyone else is living a better, more fulfilling life while you're left behind. But what if I told you there's a financial FOMO far more terrifying? It's not just about missing out on fun experiences, it's about missing out on a secure and prosperous future. Imagine this, your friends are retiring early, traveling the world and living their best lives. They're exploring new cultures, tasting exotic foods, and making memories that will last a lifetime. You're stuck working until you're 80 because your savings account barely earns a dime. The thought of endless workdays and no time to enjoy life is daunting. Scary, right? That's the fear of missing out on financial freedom, and it's a fear we can conquer together. With the right knowledge and tools, you can change your financial trajectory. But the world of investing seems like a tangled jungle, doesn't it? It's easy to feel lost and overwhelmed, like you're navigating through a maze with no clear path. Wall Street jargon, confusing charts, and the constant fear of losing it all. The complexity of financial markets can be intimidating, making you hesitant to take the first step. It's enough to make anyone want to crawl back into bed and hide. The fear of making a mistake can paralyze you, keeping you from taking action. Don't worry, investing doesn't have to be scary. With the right guidance, you can demystify the process and start making informed decisions. It's like learning a new language. Once you understand the basics, you'll be speaking fluent finance in no time. You'll gain confidence and start seeing opportunities where you once saw obstacles. Ready to unlock your financial potential and banish that FOMO for good? Let's do this. Together we'll navigate the financial landscape, turning fear into empowerment and uncertainty into clarity. Your journey to financial freedom starts now. Meet Sarah. Sarah is a bright, ambitious young professional with a healthy dose of financial anxiety. She diligently saves a portion of each paycheck, but her measly savings account barely keeps up with inflation. She knows she needs to do more but feels overwhelmed by the thought of investing. One day, while lamenting her financial woes to her friend, a savvy investor, Sarah has an epiphany. It's not about being rich, her friend explains. It's about making your money work for you. That's when it clicks for Sarah. Investing isn't just for Wall Street hotshots, it's for everyone. But where to begin? Sarah is bombarded with conflicting advice. Stocks, bonds, mutual funds, cryptocurrency. It's enough to make her head spin. She needs a roadmap, a beginner's guide to navigating this complex world. Before you even think about investing, you need a solid foundation. Think of it as building a fortress to protect your financial well-being. The first line of defense, an emergency fund. Life is unpredictable. Your car could break down, you could lose your job, or a global pandemic could hit. Remember that? Having 3 to 6 months worth of living expenses stashed away in an easily accessible account can save you from financial disaster. Next, tackle those pesky high-interest debts like credit cards. These pesky debts are like leeches, sucking away your hard-earned cash. Pay them off aggressively, and you'll free up more money to invest and grow your wealth. Now for the fun part, investing. But first, let's demystify some basic concepts. Investing can seem like a daunting maze, but with a little guidance, it can be an exciting journey. First up, risk tolerance. How comfortable are you with the idea of your investments fluctuating in value? This is crucial because it determines the types of investments that are suitable for you. Are you a cautious snail or a daring cheetah? A snail prefers slow and steady growth, while a cheetah is ready to take on high risks for potentially high rewards. Next, diversification. Don't put all your eggs in one basket. This means spreading your investments across different assets to minimize risk, or in this case, all your money in one investment. Diversification helps protect your portfolio from significant losses. Spread your bets by investing in a mix of asset classes, such as stocks, bonds, and real estate. Each asset class has its own risk and return profile, like stocks, bonds, and real estate. Stocks offer growth potential, bonds provide stability, and real estate can offer both income and appreciation. Think of it as creating a financial buffet, a little bit of everything to keep your portfolio balanced and delicious. Just like a well-rounded meal, a diversified portfolio can help you achieve your financial goals. Finally, the magical concept of compound interest. This is where your money starts to work for you, earning interest on both your initial investment and the interest that has already been added. Einstein called it the eighth wonder of the world, and for good reason. Compound interest can significantly boost your wealth over time. It's the snowball effect of earning interest on your initial investment plus any accumulated interest. The longer you let it roll, the bigger it gets. The earlier you start, the more time your money has to snowball into a mountain of wealth. So, start investing today and let the power of compound interest work its magic for you. The stock market. It can seem like a daunting labyrinth full of twists, turns, and the potential to get lost and lose money. But it's also the engine that drives wealth creation. Simply put, the stock market is a marketplace where buyers and sellers trade ownership in publicly traded companies. When you buy a stock, you're buying a tiny piece of that company. If the company performs well, the value of your stock goes up and vice versa. But wait, there's more. Beyond individual stocks, you have mutual funds and exchange-traded funds, or ETFs. These are like prepackaged baskets of stocks or bonds, allowing you to diversify your investments with a single purchase. It's like having a personal shopper for your portfolio. Section 6. Crafting your investment strategy. Now that you understand the basics, it's time to craft your investment strategy. This is a crucial step in your financial journey, as it will guide your decisions and help you stay focused on your goals. This is where things get personal. Your strategy should align with your financial goals, risk tolerance, and time horizon. Are you saving for retirement in 30 years? Or perhaps you're planning for a child's education in 10 years. Each goal requires a different approach. Risk tolerance is another key factor. If you have a high tolerance for risk, you might be comfortable with a portfolio that includes more stocks, which can offer higher returns but also come with greater volatility. On the other hand, if you prefer stability, you might lean towards bonds or other fixed income investments. Time horizon plays a significant role as well. If you're saving for retirement in 30 years, you have time to ride out market fluctuations and can afford to take on more risk. This long-term perspective allows you to benefit from the growth potential of stocks. However, if you're saving for a down payment on a house in 5 years, you'll need a more conservative approach. In this case, preserving your capital becomes more important than seeking high returns. Your investment strategy should also consider your lifestyle and personal preferences. For instance, if you enjoy researching and managing your investments, you might prefer an active approach. Conversely, if you want a hands-off strategy, passive investing through index funds could be more suitable. One popular strategy for beginners is dollar cost averaging. This method involves investing a fixed amount of money at regular intervals, regardless of market conditions. It's a simple yet effective way to build your portfolio over time. Instead of trying to time the market, which is notoriously difficult even for experts, dollar cost averaging helps you avoid the pitfalls of market timing. By investing consistently, you reduce the impact of market volatility on your investments. This way, you buy more shares when prices are low and fewer shares when prices are high, averaging out your cost over time. This approach can help you stay disciplined and avoid emotional decision-making. Another important aspect of crafting your investment strategy is diversification. By spreading your investments across different asset classes, such as stocks, bonds, and real estate, you can reduce risk and improve your chances of achieving your financial goals. Remember, there's no one-size-fits-all strategy. Your investment plan should be tailored to your unique circumstances and goals. Take the time to review and adjust your strategy as needed, and you'll be well on your way to financial success. Section 7. Embracing the long game. Investing is a marathon, not a sprint. It's about slow and steady growth over time, not getting rich quick schemes. The stock market will have its ups and downs, but don't panic. Remember, you're in it for the long haul. The key to success is staying disciplined and riding out the inevitable market fluctuations. Don't check your portfolio obsessively, and resist the urge to make impulsive decisions based on short-term market movements. Remember, time is your greatest ally in investing. Stay informed about your investments, but don't get bogged down in the day-to-day noise. Focus on the bigger picture, and trust in the power of compound interest to work its magic over time. Section 8. Taking the plunge. Ready to take the plunge and start investing? The first step is opening an investment account. There are many different types of accounts, each with its own advantages and disadvantages. For long-term goals like retirement, consider a tax-advantaged account like a 401k or IRA. For more immediate goals, a taxable brokerage account might be a better fit. Don't be afraid to shop around and compare fees and features before choosing the right account for you. Once your account is open, it's time to fund it and start investing. Remember, you don't need a lot of money to get started. Many brokerages allow you to buy fractional shares, so you can invest in companies you believe in with as little as a few dollars. Section 9. Your investment journey begins now. Congratulations. You've taken the first step towards securing your financial future. Remember, investing is a journey, not a destination. There will be bumps along the way, but by staying informed, staying disciplined, and embracing the long game, you'll be well on your way to achieving your financial goals. Don't be afraid to seek guidance from trusted financial professionals if you need it. And remember, the most important investment you can make is in yourself. Continue to learn, grow, and evolve your investment strategy as your life circumstances change. Now go forth and conquer the world of investing.